commodity analyst with agmarket.net. He's from Windsor, Illinois, farmer and former grain elevator owner. He's Channel Seed's grain marketing consultant and holds a Series 3 brokerage license doing business through agmarket.net, which is a farm division of JSA. Matt brings a producer perspective to the table, enriched with his extensive grain marketing background. He specializes in formulating risk management strategies for corn, soybean farmers, and livestock producers. Matt's analysis and commentary on grain markets appear on various TV and radio stations across the Midwest: Ag Day, U.S. Farm Report, and when I was with Agribusiness Today, he and David Brown used to have a lot of convos, eh, Matt? A graduate of the University of Illinois, Matt and his wife Tiffany live on the family Centennial Farm north of Windsor, where they are raising their 5 children. He owns and operates 3,000-acre corn and soybean farm with his father while raising 60 head of registered Angus cows. Let's introduce Matt Bennett.
All right, how are you guys doing? Everybody excited to hear about these markets today? How many of you guys did a good job marketing this year? How many of you guys could have done a better job marketing this year? Yeah, several honest folks in here. Is Tyne in here? Yes, okay, here we go, yep. I got her where I want her now. Okay, so I went to the Illinois-Missouri bragging rights game this year. And I was telling one of my buddies, I'm like, does Mizzou have a varsity, or is this their JV? I mean, what's going on here? I mean, did you guys watch that game? Which I don't want to talk about the previous 4 years. We're just going to leave that one alone. But the other thing I want to tell you about Tyne, how many of you guys get to see Tyne on TV quite a bit? You think, this is just a really sweet lady? You guys feel that way? Well, let me tell you a story about Tyne. I was in Louisville, Kentucky, nicest restaurant in town, all right? And my wife was there with us, and she got up to go to the bathroom. This guy comes and taps me on the shoulder, said, "Are you Matt Bennett?" I was like, wow, I don't usually get that happen out in the middle of nowhere, you know. As soon as my wife sits back down, Tyne says, "You'll never believe what just happened. That guy Matt's talking to, he recognized him. His head's going to be so freaking big, he won't be able to walk through the door here." And I could hear it chirping in the background, you know. So I told the guy, I said, "Hey, I got an idea. Do me a big favor." I said, you know who Tyne Morgan is, don't you?" "Yeah, she's sitting right over there." I said, "Will you at least act like you don't know Tyne Morgan? Just for a little bit." So I said, "Hey," I said, "I want to introduce you, Tyne, to this guy here." He said he's never seen you before. I guess he doesn't watch your show. And here's this, you know, Tyne, nice, sweet woman, right? She gives me the finger in the middle of the nicest restaurant in Louisville. That's why I like Tyne, though, because Tyne's for real. I mean, guys, I wanted to be here to hear the whole thing, but I've had about 5 hours of sleep this week. As Tyne knows, this is speaking season, so it's a tough go. But I wanted to be here as long as I could for hers, because she does a lot for agriculture. So before she leaves, I know she's going to leave. Even though I like giving her a heck of a hard time, because I knew she'd roast me before I got here. So I had to be prepared. I've been waiting on this all week. But give her another round of applause before she leaves. My wife and kids are coming. They're not here yet, and I'm glad they're not here yet. If you've heard me speak before, you know I don't ever cuss up in front of a crowd. But this first slide says the state of affairs for this week. It's kind of where we're at right now. I don't know about you guys. We're going to talk about the grain sell-off. I mean, obviously, this has been a rough go. I mean, how many of you guys felt like we had maybe another year, right? We always kind of feel like that. You got another year of decent prices or whatnot. But the bottom line is, I always talk about evaluation of profit margins when we're trying to figure out how we're going to market. I want to talk about, if I'm going to be selling grain, I don't want to just do it because I need the money at the time. You know, I want to have an intention. I want to have a marketing plan. I want to have something behind what I'm doing. Because my third point, I think, is a very valid one as we sit here today. Risk management is about more than the price of corn and soybeans. So how many of you guys, the timing of your fertilizer purchases over the last 18 months have made a huge impact on your operation and its profitability? Yes or no? I mean, here's what happened. For the 22 crop, in the fall of 21, you bought inputs and corn skyrocketed, kept going up, and you were rewarded for doing something that I think is a little risky, and that is locking in your inputs without doing something about the output, okay? In 22, preparing for the 23 crop, what did we spend on that 23 crop? A small fortune. How many of us sold enough corn whenever we were buying our inputs? Not very many of us, right? Because the bottom line is what happened the previous year stuck in our head, okay? And so we've got to get better about how are we going to evaluate this in the future? I mean, are we going to get a chance to buy expensive fertilizer again? Then I know you're like, why are you saying that? What is going to happen if you're buying expensive fertilizer? What else is going to be going on at the time? The price of corn will be high, right? That's what's going to happen. So you'll get that chance again. What did we learn from 23? We'll talk about it. What adjustments do I need to make? You know, what adjustments do we need to be making right now? Does this feel like, 2011, 12, 2021, 22, or does this feel like 2015 through 19, where we're at today? How's it feel? And I know I'm starting out on kind of a down note. We started with some laughs. Now you guys are like, golly, I hope this gets better, right? But guys, I'm going to place some things in your lap, show you facts, markets, fundamentals, and we're going to ask you, what do you guys think is going to happen? Anybody look at the USDA report this last week? If you've got a hedge account, this is kind of a dark slide, but I find it funny. I mean, I don't know. It's USDA, everyone gives the USDA a hard time, but let's be clear. USDA's got a pretty tough job to do. What did the USDA tell us last Friday? If you look marketing year on marketing year, you've basically taken a lot of air out of the sails of everything we're growing as far as your crops. You know, you look at, for instance, corn. I mean, that's a haircut, $1.74. That's not pretty by any stretch of the imagination, but we're in a deflationary type environment. It's a different environment than what we've been in. Nothing we can say or do is going to change that. That's where we're at right now. Principal crop acres, though, people say, well, we planted a lot this last year, and then whenever, the markets weren't very good, 15 through 19, we still planted a lot of corn and a lot of soybeans, a lot of principal crops. I think principal crops are probably going to go down somewhat this year. Why is that? Because of commodity prices. Your prevent plant was awfully low this last year. I think this was an important distinction, that this was a multi-year high this last year. But guys, we are losing acreage all the time. In the U.S. we're losing acreage, whereas in South America we're gaining acreage. And that's just the way that it's working. It's the way it's going to continue to work, unfortunately, in my opinion. Last thing I'll say is money flow. And this is before we get into talking about corn. So whenever you look at money flow, what are the people that are trading the markets? And I'm talking your managed money, so your big time players. What are they doing currently? They're selling. They don't want to own commodities. It's a very frustrating thing. You see they're below. So like on corn alone, you're looking at about a 250,000 contract short. What does that mean? If you get into a bullish scenario, or you start to see the light of day, the end of the tunnel, or whatever it is, they're going to have to cover those positions at some point, okay? Is that going to be right away? I don't know. I mean, we've got to see a big change before we start to get into that type of a conversation. So I wanted to just show you on corn three different things as we get started. First of all, world corn production at the very top, up 80 million tons from one marketing year to the next. All right, so did we make a lot of money in 2021 and 22? Anybody make a lot of money in 2021 and 22? There's not one honest person in this whole freaking room. Come on. We made a lot of money, didn't we? Did anybody else make a lot of money in the rest of the world planting corn? Yeah, that's why you got 80 million tons more corn showing up. okay? You got other folks that are saying, you know what, whatever we're doing, we're going to do more of, all right? And so the bottom line is Argentina's the biggest one. They had a big-time drought, like a biblical level drought last year. And so that is distorting world numbers somewhat, but you're going to see world production up, and it's a certainty. Whenever you look at world supply and use, the middle column, 23-24, beginning stocks at 300, ending stocks at 325 million metric ton. We don't have to go into what all that means. What this means, though, is this. We're producing more corn than what we're using. So when you're producing more corn than what you're using on a world basis, what should that mean for price action? Right. I mean, we can agree on that. It's not that that's what we want it to be, but we know that that's what price action should be. Okay, so what about the U.S.? U.S. supply and demand balance sheet. They made revisions. The biggest one was an increase in production. I wasn't expecting that big of an increase in production, but I wasn't surprised because who harvested their crop last this past year? Eastern Corn Belt, right? And Eastern Corn Belt was pretty consistently coming in with best ever type yields. And so I thought that was a possibility. I was surprised, but they did raise demand. That's a good thing. But stocks wise, you go from 1.36 billion bushels to 2.162 billion bushels. You're going up 800 million. You're going up over 50% of where we were. What would that typically mean for price action if you're taking U.S. stocks up 50% or more? Most certainly. And one thing I've challenged my growers that I talk to, over the last several months, we've all known a 2 billion carry was coming, correct? This isn't the first we've heard of it. Let me ask you, we had $5 corn for a great deal of the time that we knew 2 billion bushel carryout was coming. Does 2 billion bushel carryout, does that equate to $5 corn? Typically, historically, absolutely not. I'd say closer to $4 corn, unfortunately. All right, and so that's what we're dealing with right now is a stock situation that's a challenge. So if I take it into my balance sheet, I took all the numbers from the USDA and updated this Friday afternoon. I put my 23 exactly where the USDA is at. I bring my 2.162 billion bushels into a new crop forecast for 2024. 2024, I'm going to forecast 91 million acres today. I'm not saying that's not going to change, but that's what I'm calling it today. How many of you guys would agree with me that a $1.60 haircut on the price of corn is going to bring corn acres lower? Would you guys think that's the case or not? Yes, okay. But we had a heck of a good fall, correct? And fertilizer was significantly cheaper in the fall than what it was the year previous, correct? All right, so what we've got is an 11 million acre gap between corn and soybeans in 2023. What will that gap be this year? My contention is that your total acreage, which was like a 178.5 for 23, has got to come down at least a little. So I'm forecasting kind of a worst case scenario on acreage, in my opinion. I could be wrong. Of about 91 corn and 87 beans. If I take 91 million acres of corn and I plug in a 178 bushel yield, it's just a shade above this year, that gives me a 2.36 carry. If I go clear to 182, it gives me a 2.7. Okay, that is using the same demand as this year, which actually made this balance sheet look a little better, even with a bearish report last week, because we're carrying bigger demand into this next marketing year. So if we have a 2.7, well, let me ask you this. Could we see a 182 in 2024? Are we capable of producing that in the U.S.? I'd hope so. If we can do a 177 with the weather we had across the country in 2023, guys, I think 182 is going to happen, or 180 is going to happen. I don't know, you know how it goes. If you get a 2014 type weather pattern, what do the genetics we're planting right now, what are they capable of doing? 200 is what he says in the back. 300. Well, yeah, on your farm, not nationally though, you know, that'd be a stretch. But you'll see a 180 yield in the next 3 years is my prediction, easily. maybe a 182. I don't know. So are you prepared, for a 2.7 carry? What's your plan? Okay, so you got to understand these things as we move forward. You look at the bigger bubbles here, they're on the western side of the Corn Belt. The bigger bubbles are the areas that grew more corn as a state than what they did the previous year, all right? So what is this impact? Why do I even want to talk about this? I'll tell you why I want to talk about it. What has basis looked like over the last year for you compared to historics? For last year's crop, what was your basis like? Not the 23 crop, the 22 crop. Basis was pretty darn good for most of us, even here. Why? Because what was going on out there for the 2022 crop? Drought. What is the western states? What do they all have in common? Huh? Somebody said something, but I couldn't hear you. Don't be so committal over there. Come on. What did you say? Did anybody say cattle? It's cattle. Western states, whether you're talking Kansas all the way up to North Dakota, you've got a lot of cattle. What is the function of the market if they're in a drought situation? What's the function of the market? To get the corn where it's being consumed, correct? What does that do for basis? It hyperinflates the basis locally for them. And then what does it do? It filters out into the rest of the country. So everyone was able to enjoy a better basis. I'm going to prove it to you here in a minute. But I want to tell you a story about a grower, Liberal, Kansas. This guy calls me in the fall of 22, and he said, my irrigated corn is running about 225 bushel an acre. His dryland corn wasn't very good. 225, he said, the feed yard wants my corn. What do you think I should do? Because I'd really just like to put it in the bin. And I said, why? He said, that's what I always do. Anybody ever said that? That's a good marketing tactic, isn't it? I said, what's the feed yard willing to give you? He said, $9. I said, what was your question again? I mean, how many of us have done some really stupid stuff whenever it comes to marketing? People ask me, they tell me they feel like I speak with conviction. Why do you speak with conviction? Because I've made every single one of these mistakes. I have. And I've seen them made over and over and over. But here's what I told the grower, and here's what we need to think about. If I'm putting $9 corn in the bin, what's it going to take to get it out? I mean, why would you put $9 corn in the bin? And he said, you're making a lot of sense right now. But guys, how many of us in the fall of 22 would have been perfectly fine selling everything and being done with it right out of the field? Right? But the thing is that what do we always want to do about marketing? What do we want? Higher or more? More. Because if it's $5 in 2 weeks and we've gotten the rally that we all sit here today and don't think we're going to get, are we going to sell? Exactly. We'll sell some, but guys, we got to understand how it works. So what were bids? I mean, what were prices? The end of the calendar year 22, beans were $15.34, corn was $7.04 at ADM Decatur. But guys, look at the basis. 25 over. 25 over with $7 corn. What was the basis this year? And I'm not trying to depress you, but $12.98, corn was $4.73. What's the basis? 2 over. Now, if I would have told you you've got two different prices and not told you what time of the year it was, one's $7.04 and one is $4.73, one of them has a 25 over basis, one has a 2 over basis, which one would you think would have the 25 over basis? The lower one, right? How many times are you going to see a $7 corn bid with a 25 over basis, right? And so bottom line is we've taken a major step back. Now, look at ethanol margins. Ethanol has been a bright spot, but ethanol margins have dipped recently on the spot basis. So if they're selling the ethanol, crushing the corn and getting ethanol and DDGs out of it, this is what spot market looks like. But the good thing about this is that ethanol grind has stayed very strong. Why? Because these guys are really good at managing margins. They've been great at managing margins historically, and we expect that these margins are actually going to improve to where they're not going to want to slow too much. That's good news. And I know some of you guys have been waiting on one tidbit of good news. I do have a few other slides that are on a positive tilt. What is corn worth today at the Gulf? 198 per metric ton. That's freight on board. So if I include freight for all these different countries, Ukraine's cheaper than the U.S., but of course it's a limited supply that they've got available. Logistics are going to be a bit of a concern too. We're cheaper than Brazil and Argentina. That's part of the reason our export program has been pretty solid. So from a demand perspective, we're starting to see what happened. Cheaper prices are usually supposed to do what? Incur demand. Cheap prices cure cheap prices, just like we experienced the other side of things here not too long ago. When you run prices too high, what do? You hurt demand. What else do? You encourage what? 80 million more tons of production on a world basis, correct? And that's just the way this thing works. But we're losing world export share. Now, we're narrowing the gap maybe slightly this year, but we're losing world export share to the Brazilians, all right? They are the world's largest corn exporter right now, and even though they're going to have a short crop this year, comparatively speaking, the reason they're going to have a short crop is because they're planting less corn. Profit margins, inputs, those things are forcing them to plant a little less corn. So if there's a bright spot in here, I'll talk a little bit more about it later. It could be that if they have short acreage and then they end up in another weather situation, it's going to be something to watch. So there's your chart. And I tried to update it back in the back. Why did I try to update it back in the back? Because this morning we made a new life of contract low, but we were trading higher when I started. Now, if we're trading lower again by the time I'm done, I apologize. Okay? But I don't even know what room I was in. This was in the last 2 years I was speaking. And when I got started, we were down 6 cents. And my first question when I got done, the guy said, "Will you keep speaking, please?" And I said, "Why?" He said, "Corn's up 3 right now." And I said, "Well, okay, I can keep going if that's going to be the trick." But here's the thing. This chart looks pathetic. It's awful, right? How many of us held on to way too much old corn? You freaking liars right now, guys. I talked to the elevators, I know, okay? But here's the thing. We held on to too much old corn. It is what it is at this point, but we have to make some decisions. We have to make some decisions. Is this thing just going to go down forever? No. Even in a downward trending market, you typically get bounces. I'm expecting to get a bounce. This market's extremely oversold at this stage of the game. How much of a bounce could we maybe expect? All right. I think somewhere between 6 and 10% based upon the technical nature of this. I don't want to go into too much detail, but let's say you get a 10% bounce on a 440 market. That's 44 cents. That'd be quite a bounce. I don't know that we can get that kind of bounce, but that's about the most that I could see happening. I don't see us taking March corn back to $5. May might have a chance. We're going to get short on time with March here before too long. If you do get a bounce, though, guys, don't do what we usually do, which is get bullish. Okay? This is not the type of year to do such a thing. My personal opinion is you figure out what you need to get to make things work for you. I'd say to be profitable, when it comes to old crop, let's be realistic. On the 23 crop, there's a lot of folks that are not going to make money on 2023 corn. True or false? Absolutely. Because we spent too much. It is what it is, all right? So, 24. Obviously, this chart isn't a whole lot better looking than what the March chart was. These corn held in there really well, but then when we finally broke $5, it's just been stepping off a slope, all right? As far as 24 corn is concerned, I'm sitting pat right now. I mean, we've been fairly aggressive. If you get my newsletter, you'd see kind of where we've been, 40 to 60% sold at this point. So I don't want to sell anything down here. If I hadn't sold anything yet, because I don't want to be a Monday morning quarterback, I don't want to sell here out of fear it's going to move lower if I'm not profitable. Why? This is a long marketing year. Okay? Don't lose sight of that. I mean, we may be back into a situation where we do put everything in the bin and we do try to manufacture a little bit of income putting corn in the bin. But one of the worst marketing moves you can make is selling because you're afraid the market's going to move lower. especially if you're not profitable. I can't condone that. I don't think it's a good idea. Soybeans. World soybean production. How many of you have heard consistently over the last few weeks about how poor this Brazil crop is going to be due to weather? I mean, it's been all over the news. Anybody seen anything on this? Look at the Argentine production for this year for soybeans. Last year was what? 25. This year's 50. So if you want to tell me that on a world basis, Brazil's going to have an off crop, and I want to get bullish based upon world production, I'm going to ask you, how much do you have to take that Brazil crop down? In my estimations, you need to take it down 25 million tons, or you're going to produce more soybeans in South America than what you did a year ago. So be cautious in that assumption. Now, how poor could this crop be? We'll go into more detail in a minute, because I saw something really interesting come out just yesterday. But Argentina from 25 to 50. Soybeans, what's this do for supply and demand? Beginning stocks on a world basis, 101.9 down to 114.6. Now, if you start really cutting into Brazil, this could change. If you took 15 million out of Brazil, you'd be right back where we started the 22-23 marketing year. Okay, obviously prices look different then, but whether you can get that kind of cut, I don't know. But right now, the forecast for most people is that you're going to raise more beans than what you're going to use on a world basis. The U.S., last week's report was pretty darn bearish. All right, you took your carryout up 35 million bushels, entirely based upon production. And so I've been saying all along, if I'm looking at world and U.S. corn and beans, the only one of the four that's bullish is the domestic situation for soybeans. Okay? But one thing that I thought was very important on Friday is that the market, if you were watching the market, we were trading over 30 cents lower. And then all of a sudden, towards the end of the day, people started buying soybeans. That was a good sign. I mean, that was actually a good sign. Today, don't look for beans aren't trading very good today. Are we done going down? That's the big question, and I think it's all going to depend upon what does South American production look like. There's a whole lot of other stuff going on here, don't get me wrong, but if South America has more production than a year ago, it's going to be really hard to get super friendly to these beans. If I take that 87 I already told you about, 87 million acres, and plug it in with a 52 yield, as you can see, it's what, 425? And so obviously that'd be stocks building from this year. That's holding demand constant. I think demand will grow, especially if we continue at the price structure we're at today or lower. All right, now if I go with a 55 yield, because I'm going to use the same rationale as corn, I mean, I think 55 bushel national soybean yield is also going to happen in short order. I'd say in the next 2 to 3 years. I mean, we've got the genetics to do it. These soybeans continue to just surprise people. I mean, a lot of folks felt like this bean crop was 47, 48 national crop, and all of a sudden we're back up here at 50.6. I mean, it's impressive to see what kind of beans we've grown. Now you look at Brazil, 18 straight years of more production, as far as 18 straight years of planting more acreage. Obviously you can see production ebbs and flows, but 18 straight years. I mean, this is an incredible situation. Now corn, they're planting less corn this year than they did last year, but they're planting more soybeans. They're planting more cotton as well. And so obviously this is somewhat of a powerhouse whenever it comes to Brazil. Now, what did they come out with yesterday? Brazilian Farmer Lobby. So a group of farmers, they came out. I mean, it's a large group, several growers. They said that they're forecasting 135 million metric ton crop, which would be, 22 below the USDA. Now, I thought that was one of the lowest estimates I've seen. I've actually seen a 130. But if these guys are correct, is that going to precipitate a rally? If you end up at a 135, that will be very supportive to soybeans. That could be a saving grace, if you will. But 135 to 157, CONAB is an agency in Brazil that reports on this stuff. CONAB is at 155 right now. I can't imagine that they're that far off. But I'm telling you, it's pretty hard to forecast it, though. And this came from Eric Snodgrass, our buddy from Nutrien. Eric Snodgrass gave me this slide. We presented together down at down at Wren Lake the other day for farm credit, and we exchanged some slides. The zeros and the ones here are from October 1st to December 31st, what the rank of precipitation was since 1979. Guys, the driest that they've been since then in several of these areas, if you have a 0 or a 1 or second driest. Obviously, Brazil was excessively dry. And so if you look at this map, obviously not everywhere on this map are they producing, but look at this map for where it was the driest, and then we'll show you where these states are overlaid is where the main production areas are. Not necessarily on the coast, you got to get a little bit inward, but Eric put these states overlaid over these areas so you can just see how massive these areas are. So obviously in most of those areas in the middle part of the country, excessively dry. All right, now I overlaid this at the far, down at the lower right-hand corner. The dotted line is U.S. soybean planted acreage. The other line is Brazil's soybean planted acreage. I'm going to tell you right here that we'll never plant more beans than the Brazilians again. It's not going to happen. Never will happen. Why? They continue to expand. If you guys have heard this story, I apologize, but you want to know why they expand. I was with a group of growers at a Farm Futures conference, and I spoke, and then after me was Brazilians on the panel. And these guys, one of these guys said, I farm 300,000 acres, so obviously it's a very large operation. That's not the only one down there doing that, by the way. And Max Armstrong said, hey, what was your gross proceeds last year? He said, 250 million. And he said, well, what was your profit margin? You know, we kind of want to get an idea on net, just to get a scope of the operation. He said 35%. Why are they expanding like this every year? If I'm making 35% profit margins, I'm going to do everything I'm doing as much as I can possibly do it. And that's exactly what's going on, guys. They continue to expand, and that expansion is not going to slow down. That is what their ending stocks looks like, though. Okay, so if you look at Brazilian ending stocks, this year is likely to be, if they have the crop that they're currently forecasted to have, the largest ending stocks they've ever seen. Okay, so that obviously is a bit of a headwind on the market. How does it compare to the U.S.? U.S. is very tight historically. Now, we're a little bit greater. This was after the report the other day. A little bit greater, of course, than a couple of years in the last few years. I mean, we're minuscule. Like, we don't have a whole lot of beans domestically. So let's put it on a world basis. How much beans do we have on a world basis? We are arguably going to have the most soybean stocks that we've ever had in history on a world basis. So in the past, whenever we've made new highs, as you can see, which has been multiple times in the last 20 years, we've still rallied beans at times. Why? Because demand was out of this world. And if you've heard me speak in the last 10 years, several times towards the start of that 10 years, I talked about Chinese demand that was rapidly growing on a yearly basis. Chinese demand is not growing today. It's not growing, okay? They still have strong demand, don't get me wrong. It's not growing. Their population is not growing. Their economy has been in a bit of turmoil. And their population actually is going to be in decline, which is something that we all need to know moving forward, because it's going to have an impact on the world markets. All right, so people have talked. I've heard other analysts say that U.S. beans are actually cheap on the world market. We get our stuff through this company called AgriSensus and Fast Markets. Fantastic data. But they compile this. I just did this on Friday. U.S. beans at the Gulf were $474 metric ton, more expensive than Brazil or Argentina. It does make sense because you're getting into harvest in South America. And so absolutely, we are out of the market currently. You're not going to see very many beans exported. You look at this. Obviously, we're losing world export share to a very large tune, okay? How many of you guys think that it's concerning that the U.S. is losing world export share? I think a lot of people would say yes, and I kind of agree with you, but I kind of don't for a reason. Here's the thing. We already established Brazil's going to continue to grow in production, correct? The other thing is, guys, we're trying to grow fuel here, right? This is a renewable diesel discussion that we continue to have in this country. We continue to open more crush plants and have them into production, into place. And the bottom line is this: would you rather be in a situation where when your trade partner gets upset with you, the price of beans goes down because they make it clear either they're going to cancel a shipment or they're just going to quit buying beans off of you? Would you rather be in that situation or one in which we're using more beans domestically and we're perfectly fine with where we're at, right? We say, we're going to use all the beans we can possibly use. If you want U.S. beans, you're going to have to come get them, right? In my personal opinion is I certainly hope that we get in a situation where, crush margins are still good, but we get in a situation where we continue to crush more beans domestically, okay? Why are crush margins, why have they plummeted? For obvious reasons. You've seen price of soybeans was, fairly high. Soybean oil was like $65 at one time this last summer. Meal was screaming higher. Meal and oil both dropped precipitously. Which what happens with soybean crush, what have we always crushed beans for here in the U.S. in the past? Meal, right? So we crush beans for meal. Well, what are we going to do with all this oil, though, right? That's been the discussion over the last 30 years. What do you do with all this soybean oil? Why did we have, back in December, soybean crush margins at $3 a bushel? Because people wanted the meal and they wanted the oil, right? Whenever you want both products, that's when your crush margins get pretty interesting. Now, we've finally seen them stabilize, and the good news, it's not a multi-year low, but we definitely stepped off a cliff because the products lost value as well. There's your bean chart. I guess the one good thing I can say about this bean chart, if you look, there's a gap there about $13. All right, do I think we go up and fill that gap on March beans before March goes off the board? Boy, I don't know. I wouldn't bet money on it, okay? Now, if I look at the November chart, there's a gap there too as well, okay? You see what I'm talking about, a gap in the market that like one day where it stopped and then the next day where it started, it's below it. And there's no, they don't overlap. That's what you call a gap in the chart. When you see a gap in the chart, typically your technical traders, they expect whenever you get a bounce, you'll go up and fill that gap before you go ahead and move on lower, and sometimes you go back higher. But I do expect November beans has a really good shot of filling that gap. I just think March is going to run out of time. So managing risk in 23, this is the last part. Some of you guys may not like this, but I think it's kind of funny. We may as well come to grips with our situation. That's, kind of where we're at right now. But I'm going to throw some good stuff at you, okay? Eric shared this slide with me. This is what his models are forecasting for weather out through April in the areas that have been so dry. Yes, they've had rain recently. Yes, they've healed up somewhat. But his models are still calling for dryness out into April. Why is that important? If you paid attention this fall, you heard a lot of folks talking about how the soybean crop went in the ground late due to two different things. In the north, they were excessively dry. In the south, they were excessively wet. It was really quite the dynamic that we saw. What did it do? It pushed soybeans plantings back. When you put the first crop and you push it back far enough, now all of a sudden the safrinha crop goes in the ground a little bit late. If it goes in a little bit late, it's important to note because the dry season for the safrinha crop typically occurs on the heels of pollination. You don't want it occurring during pollination, okay? And so the Brazilian grower is very cognizant of this, and it could limit acreage even more depending on how harvest goes for them. But this is something certainly to watch. It could be supportive for the corn market. Would it be outright bullish? Not unless they see an absolute drought, okay? But I do think it could be supportive. Another thing that could be supportive, this is from Drew Lerner. Drew Lerner has been putting this out quite a bit. Great guy, World Weather, ADM Investor Services, who I broker through. They follow him and they subscribe to him, so I get all his information. His forecast, as you can see, for precip this next summer is not a good one. It looks a whole lot like 2022 to me. What he's saying is we're coming off an El Nino. I think most of you that follow the markets know that that has been discussed a lot. Coming off of an El Nino. If you're coming off of an El Nino, his forecast suggests that you're going to be quite dry in the west. You're not going to get rain coming in from, but here's the thing. There's a lot of snow cover on the mountains. They're getting snow all the time here lately. Usually when you get snow cover, it precipitates good moisture flow through that part of the world. So who knows whether he's right or whether he's wrong. But here's what I'm going to tell you. I'm here today. Most of us are going to at least raise a crop, right? In 22, Champaign County was dry as a bone, correct? Right? Are you guys still awake? It was dry. Did we raise better corn than what we thought we were going to raise, even with really bad conditions? Yes. I was in Sioux Falls, South Dakota yesterday. You can't talk the same way up there. If they're excessively dry, they're not going to raise what Champaign County is going to raise. Okay? So what I'm saying is this. If you get a rally in the market and you're sitting here in Champaign County, you've got to know what the past has told you about what kind of crop you're going to grow, especially if you're buying crop insurance, and be willing to reward the market on some sort of a rally. Do I want to keep flexibility? When there's forecasts like this out here, you better believe I want some flex. I got to be cautious as to put too many eggs in one basket. What's the renewable situation? Yes, we know a lot of plants have come up. One of my friends put this together. Here's the thing. Big oil is involved in renewable diesel. We all know renewable diesel is a cleaner burning fuel. It's heavily subsidized. Tax credits are huge. If you're in California, you've got a fleet of trucks, you cannot buy anything but renewable diesel. 97% of the renewable diesel consumed in the country right now is consumed in California. That's pretty incredible, isn't it? But the bottom line is this. Is that going to spread throughout the country? Most likely it will, okay? You're going to continue to see more and more demand, but it's very important to note, if you're Chevron, if you're one of the BP, a lot of these folks have joined in. Why? Because if they're going to lose market share, what are they going to have to do? If they can't beat them, you join them, right? And when there's big tax credits, big money people tend to show up. And that's just the way that it works. And so, yes, they like renewable. If you look at the growth in renewable, it has been extraordinary. At the same time, your regular old diesel fuel is not growing. And so obviously we've had big time increase in production. Renewable is going to be something we're going to talk about, but it's going to require our administrations, because obviously this is an election year, to support renewable fuel standards, okay? If we don't, I mean, we all know that politics can really bite us. The thing that concerns me about renewable diesel, as a standalone product without tax subsidies, it doesn't work. Why am I concerned about that? Because you're a stroke of a pen away from some serious hurt in the Corn Belt if we're relying on renewable diesel, right? It's got to get to where we don't have to rely on Washington. I don't know if we can get there yet. Do you guys see any problem with this picture? I bring this up for a specific reason. And I'm not anti-EV. Don't get me wrong. I'm not pro-EV. I don't want one. I can't make it work with what I do. It's just not, not for me. But we established big oil is in bed with renewable. Does big oil like ethanol? Historically, they haven't, right? That's an easy one. But what are they doing now? I don't even know what you'd call it. They're texting, they're Snapchatting, I don't know. Like they're getting together. They're like talking. They're friends. They're cozying up. Why are they cozying up? They've got a common foe. That's their common foe. Engine manufacturers, ethanol, big oil, all these folks. Do you think they like EV? Absolutely not. They're trying to get better at what they do, though, which is a really darn good thing. We're trying to get more friendly to the environment, so to speak. But you look at sustainable aviation fuel. If you want to get excited about renewables, sustainable aviation fuel is actually even more exciting. The problem, once again, with sustainable aviation fuel, the preferred feedstock, this isn't the problem. The preferred feedstock's ethanol, just so you know. It would gobble up a ton of corn in the U.S. The problem is that sustainable aviation fuel is also heavily reliant on tax credits. It can't stand on its own right now. But if you look, the annual global production right now, you've gotten to about 160 million gallons in 2023. That's the whole year. In the month of October, the U.S. airlines fuel consumption was over 1 billion gallons of fuel. So what would be the growth potential if the U.S. government mandates sustainable aviation fuel that uses ethanol as its feedstock? They are supposed to be deciding this spring if they're going to allow in this GREETS deal. I don't even want to go into all the details, but I can tell you right now, most folks lean heavily. Tyne's cohort, Jim Wiesmeyer, is leaning heavily towards we're actually going to see this happen to where they're going to support corn-based ethanol as a part of sustainable aviation fuel. What would be the growth? How long would it take to get there? Your guess is as good as mine, but I can tell you that the growth potential in this it absolutely dwarfs renewable diesel. That's what your dollar looks like. I updated this last night sitting in an airport. The dollar actually, no, that is not the dollar. No, I apologize. I know it's not the dollar. Let me get to my nat gas chart. The dollar went up to 107 this last summer, plummeted, and it's gotten back higher. Here's the thing about the dollar. What do we want as U.S. producers? A cheap dollar, okay? And the dollar's been screaming this week, and it makes it so hard on commodities to rally. You got to understand how those things work. Nat gas. Everyone was asking me in early December, why in the world is nat gas on this just absolute cataclysmic downward spiral? I said, well, I'm standing outside in a t-shirt, and it's December the 10th. Why would nat gas be down? It's just too simple sometimes. But here's the thing. Nat gas being down, what should anhydrous what should it be doing? Be moving lower. What was anhydrous in the month of December compared to the month of October? Quite a bit higher. Quite a bit higher. And you look at the move in the market in nat gas, which is the main ingredient, it's very frustrating. I say managing your inputs for 24 is going to be exceedingly important. You're going to have to be really cautious as to what you do as far as your purchasing. I think maybe a little bit of patience could pay off this spring. I'm not going to tell you what to do with your fertilizer, but I'm telling you, if they're quoting you $800 for anhydrous right now, I'm not buying $800 anhydrous. Not doing it. Not interested. Not with corn at $4.80. Does that make sense? Does it work? It does not work. What happens on the heels of a rally? So you got the 08, 12, and 22 rally. We tried to draw correlations to what happens here. I just want to show you what has happened so far. You guys remember 2009? 2009, we could never get a rally. How many of you guys picked wet corn in 2009 that was pretty good, but you had to take 10 points out of it, and we didn't make any money at all? 09 was tough. All right? You get into 2013, we could not rally. How much does that chart in 2013 look like the one in 2023 if you look summer on? They're dead on. They're dead on. And so which one of these scenarios the following year might I think that the market's going to follow? I'm going to choose 2014 because of the way that 13 and 23 were correlated. Okay? 2010, we got up to 605. What's the chance of 605? I think it's somewhere between slim and none. Personally, you're going to have to get a massive drought to make that occur. 2014, we got to a high of 514. We've already seen that for 24 corn, correct? We've already been there and done that. That's what your 24 chart looks like. It's by far and away the ugliest of the three charts. Okay? As a producer, though, I've got to know. I've got to know what is my game plan. You guys think that we will get back to D's corn over $5? He says no. What's the rest of you guys think? A 20-cent rally? I think we will. I'm not saying we'll stay there. Something typically happens that we're not expecting, though. All right? Usually in a downward trending market, once again, you get some sort of a rally. Would I be placing my orders at $5 if I'm thinking that we're not going to get there? Because let's be honest, some people will tell me, by golly, I don't think the thing's ever going to $5. And then it goes to $5, and I'm like, would you sell any? Well, no. I'm like, well, you didn't think it was going to go there. Why wouldn't you go ahead and sell some and reward the market? Well, I don't know. I thought it was going a little higher. How many of us are like this? Do you guys market this way? Yes, we market this way, but I would get orders in before you get to 5, right? I mean, put them in at 4.95. Now that we're below 5 and everyone's worried about it, how many people are going to want to sell corn at $5? Everyone in the country, correct? I mean, you talk about cash corn. I mean, I will tell you this before I get to this chart, because I thought this chart was super interesting. When you get to cash corn, guys, there is a wall of corn that's going to show up in this market if you get a rally, a wall. What's going to happen? If you get a 25-cent rally, do you think cash prices go up 25? Absolutely not. I'll bet you money they don't. Why? Because the freaking grain handlers can't handle it. It's going to be second harvest, right? The grain handlers are going to say, hey, guess what? Basis is going to have to widen a dime because I can't take any more corn. And so understand if you get a rally, and I'm not saying lock your basis in. That's not what I'm saying. How good were basis contracts to use this year? We don't even need to go there, okay? What I'm saying is understand what cash price you're willing to sell at and get the offer in. I thought it was super interesting that you saw Jan crude and live cattle before these went off the board were distinctly correlated. Cattle are important to us to an extent. Yes, we feed about 5 billion bushels. Most of that, actually, who consumes the most corn as far as your grain-consuming animal units? Is it cattle or is it something else? It's birds. It's birds, but cattle still consume quite a bit of corn. Here's the thing. Whenever you looked at crude and live cattle being very well correlated, usually live cattle are correlated with what? Equities. Equities. And so if the Dow is strong, typically we see a really strong cattle market. Now, why is this important? Obviously, there's probably not as many cattle producers here as what I was with yesterday. But bottom line is the cattle market is going to be important to watch. I think that you could see actually something positive occur this year. If you watch the way the cattle market's traded, it went to 199.60. I told Paul Yeager on Market to Market we was going to $200, and he won't let me forget it, by the way. I said, we were within 40 cents. Don't I get some sort of consolation prize here? I mean, but 65-year low in the cattle herd. But why is feed usage so strong? Because you're feeding 105% of what we were last year. Cattle on feed are super strong. So what happens when you're feeding that much cattle is you're feeding a lot of heifers. If you're 105% of a year ago, what's that mean about the size of the herd? It's getting smaller. I'll tell you, cattle market, if I wanted to get bullish something, I'd probably be a little friendly cattle. Now, would I go out and buy a bunch of futures? I don't think so. But if you see cattle on feed this year, when it goes below 100, those reports come out once a month. When it goes below 100, my prediction is that it stays in the 90s, 90% of the year previous for 3 to 4 months max, and then you'll be in the 80s. Why? Because cattle on feed was so strong this year. I wouldn't want to be short with cattle on feed in the 80s. We know fertilizer's cheap. We've already established that. What does this equate to according to our Mr. Schnitke? Gary and I've talked to him about this. I'm like, if a guy wants to get depressed, just look at this farm doc thing that they put out this last week. It's just the reality of the situation, though. I believe Nick Paulson helped write this as well. What they looked at was basis FBFM, actual numbers, what were costs last year, and they came up last year with just under $1,200. They think that it's going to be a little lower this year. Personally, I saw most of my growers with relief up to $200 an acre on fertilizer this year based upon prepaying it early, like August timeframe, Farm Progress Show time, okay? That was, of course, earmarked versus buying your fertilizer in the middle of fall of the last year, okay? I do think costs will be lower. How's this going to impact things? They're saying your average operator land return and cash rent on a 50-50 corn and soy rotation is not pretty. That's exactly what they're showing. You're going to lose money is what they're showing on average cash rent. So what's that going to do for an acreage swap? Well, I think you've got your corn acres locked in Illinois. I don't think you see a lot of swing acres. Any swing acre you see, if you start looking at the supply and demand economics, you look at the prices, you look at break-evens, acres might switch to soybeans. We just had too good of a fall though, right? I mean, I think most of your acres are probably already locked in, but where did they come up with this? If you look at this, Central High is where I'd probably put us. They're showing farmer return on corn, negative $154 an acre, and on soybeans, negative $52 an acre, and that is with cash rent at what? I don't even know what they put cash rent for Central High. 363. Well, I mean, you know what? That's what the numbers are showing. Now, I thought it was interesting. They put what? Pesticides, which I'm assuming that's including chemical, at 140. I think that's a little high. We got a little bit of relief on chemical as well this year. I don't think I'm going to have near that wrapped up in mine. But bottom line is, these things look pretty tough. Okay, so what does that tell me to do? I mean, I'm not trying to beat anyone up. I'm saying on rallies, how does this impact you? What do your numbers look like on rallies? Figure them up on a daily basis. And then when we get back to the old corn discussion, it's costing you 3 cents a bushel to own corn today based upon the cost of money, interest costs. What does it cost if it's in the elevator? 3 cents a bushel plus storage. Now, a lot of times I say there's nothing free about free DP, because a lot of guys say, well, what about free DP? Boy, I just don't know. This year is a tough year, but I don't like giving up physical ownership if I've still got it. Why? Because then I've got bargaining power if it's in my bin. Right? I mean, the elevator's not going to pay you a premium for corn that he's got sitting in his own bin, is he? But if you call the elevator and you say, hey, do you need some corn? And they say, yeah, we could sure use some corn. Well, will you bump your bid 5 to 10 cents? I can guarantee you won't get it in his bin, but you might get it in yours. I want to have physical ownership still, and I would say if you're trying to do anything, potentially sell the carry in the market if you get any pop whatsoever, because we're in a carry market situation. The May is higher than now, July is higher than May. Sell the carry in the market, it's the same thing the elevator does, and then what are you waiting on to happen? Basis to improve. When basis improves, you liquidate the position. That's what it looks like over the course of time, the cost to own commodities. You got to understand how much it's costing us to own these things. Again, ask yourself that question. What do I do? What should I do? You know, if I'm putting corn in the bin and it was $5 last fall, a lot of us are going to say to ourselves, I can't sell corn at $4.40 now. It was $5 when I put it in the bin. What's that got to do with anything? You know what I'm saying? Or I can't sell soybeans because I sold them for $17 in the last 2 years. Well, good for you. I'm not trying to be a jerk. I'm just saying, what does that have to do with making money on the 24 crop? Right? I mean, that was in the past, and we would be best served if we forget about 2021 and 22. 21 and 22 were so profitable, abnormally profitable, correct? How many times have you guys made $300 to $500 an acre net profit? You can count them on one hand, can't you? Well, guess what? We shouldn't expect to do it every year then. All right? We've got to adjust ourselves in our thinking and what we're trying to accomplish here, because here's what I would say 21 and 22 were. Those suckers were equity building years. I'm all about balance sheet protection right now and not doing something really stupid. Questions? I know you guys are like, could you get this guy out of here at this point? We need to talk about something better. I would love to answer any questions, guys. I just want to talk truth and show you what's going on. I'm not making any bold predictions. We have a high-low indicator that we throw all of the data in for carryout for the price of the markets at the time. We did that on Friday again. We did it at the start of the calendar year. And the range that it showed was 550 D's corn down to 375. Okay? We did it on Friday again after those numbers were released. 5.25 to 375 is what our high-low indicator is showing right now. Could we see sub $4 corn next fall? What do you guys think is going to happen if we carry a 216 this whole marketing year, and then you end up planting 91 million acres? What's going to happen if you have 180 bushel corn? You're going to sell a lot of $3 corn out of the field if you haven't sold it already. That's what's going to happen. That's what's going to happen. And so I hope there's a scenario in which that doesn't happen. I don't know whether it's that Brazil burns up. I don't wish ill will on anybody. I don't know if it's that we plant 90 million acres and then we end up having a subpar year. I don't know what it is. I'm telling you, though, your marketing plan better consider what is going to happen if you have a good growing season this year, because it would sure stink to handle 260 bushel corn and make no money. Correct? Because that could happen. That could happen if you don't sell anything in advance. Do the math at 260 bushel corn and 350. What's that look like with your cost structure? Questions? Come on, someone's got a question. Yes, yes, in the back. I saw yours first. Yep.
Anything on wheat?
I thought wheat would be our potential savior, if you will. You look at spring wheat acres, they're going to be down. We're worried about winter kill with this last cold weather event. And then you come in here out of the 3-day weekend and wheat has not looked very good. Personally, I think that wheat should get some legs. We are looking at a lower carryout on a world basis by 11 million tons, according to the USDA. This year, we're forecasting that we're going to have a bigger U.S. carryout, though, so it's a little bit of a headwind. Why? Because we had such a crummy crop last year. But we're predicting that this year we're just going to have a good crop. Now, I'll believe it when I see it. It seems like this wheat crop has really struggled out west, of course. We've been okay in this part of the world. What would my inclination be? You know, I think if you could see, July wheat make a run back towards $7 eventually. I think it's possible. If you do get that, that is going to support corn and beans to an extent. We've seen wheat drag corn and beans out of the doldrums before. I hope that's what happens this year. I said it last week on Market to Market. I had several people call me and say what they thought of my analysis on wheat pulling us out of the doldrums. And I'm just telling you what has happened before. You know, that wheat has pulled us out. Let's hope that it does again. I'm not bullish, but I'm supportive wheat. I'm not bearish. I saw a couple other hands. Oh, go ahead.
On the percentage of your clients that you deal with, how many of those priced corn and soybeans fall of 22 for the 23 crop? Was it like 50%, 100%, 10% to cover their high input costs?
Not enough. Not enough. We made the recommendation. I would say that with what I do, typically I tell people I don't sell for anybody. I don't take any POAs or anything. I don't want any part of that. That's a good way to get a lawsuit. I mean, eventually. Yes, you've got POA. Well,
Based on your advice,
based on our advice, we had more people sell ahead of time than what we typically see. We were very proactive about it, and the reason wasn't that we thought the market was going to go lower. Let me be real clear on that. The reason is that we were spending $450 an acre on fertilizer. And so we told them, the analysis that I was doing was showing it was taking like 65 bushels an acre with corn at the price that it was to pay for your fertilizer. And I told people in the I states, why wouldn't I go ahead and sell 65 bushel an acre at whatever, $6 corn? You know, whatever it was at the time to pay for those particular folks' inputs. This last year we were running in the middle of harvest, whenever you could buy fertilizer, we were running about 45 bushels an acre. So you didn't even have to make near as much of a commitment from a bushel standpoint because fertilizer was so much cheaper. But what percentage? I mean, I could go back and look. It'd take me a long time, but I can tell you this. It wasn't enough. It wasn't enough. What happens is this. Someone at something like this will hear what I have to say and they'll say, okay, I also think I can make money here today. And I know right now it's hard to say that. But they'll say, I can make money here today. Why don't you sell me a contract of December corn? I'm like, well, how much are you going to grow this year? 300,000. I'm like, okay, boy, we're really committing a lot here, right? I understand the fear, right? I'm going to sell and the thing's going to skyrocket. Guys, that is why risk management it has evolved so much to where you can lock a floor in, let the upside run to an extent. Maybe you're capped at $6. Maybe you're capped at $5.50. I don't know. But there are tools to put in place, but people don't want to try it because they hear the horror stories. I mean, how many of you guys have heard that I'm not going to get a hedge account? Or have said it yourself, I'm not getting a hedge account because I know someone that had a hedge account and went broke. Have you guys ever heard that rationale? That's a false statement. You don't go broke using a hedge account if you're using it appropriately. A hedge account is designed to hedge risk. But here's the problem. The grower sells one contract of corn, and it works out really well. Next year, well, I'm going to sell 50 contracts of corn, because that worked out awesome. Now the corn market, what's the corn market going to do if you take the biggest position you've ever taken in your life? It's going to go the opposite way. I can assure you that's going to happen, right? But that's why you hedge risk. You don't increase risk. But I wish more guys would have taken our advice. But here's the thing. Whenever you're given advice like that, I don't know if it's going to be the most profitable sale or not, right? You got to step out there. I mean, I catch flack all the time on Market to Market or U.S. Farm Report. I typically get a phone call, and it's not to tell me I did a wonderful job, mind you. It's, who do you think you are? You know, why are you so freaking bearish all the time? And I'm like, okay, I'm telling you what my opinion is. I'm telling you what my opinion is, because why go on a show like that and be wishy-washy? I'm going to give my opinion, and it's just like the weather. I mean, Eric is a phenomenal forecaster, but he'll tell you that looking at Drew Lerner's summer forecast, because he and I have discussed this, and he likes Drew, but he said, I don't put long-range forecasts out there like that because so much can change. And it's the same thing with the markets. But I can assure you this, if you sell at a profitable price because you paid a lot for fertilizer and then you get to sell at higher prices later, I'd much rather do that than not sell anything because I'm afraid of the market going up and then taking a bath like we did on the 23 crop. If your first sale is your worst sale and you make money on it, you're going to be pretty happy. Think about that for a minute. What did you have?
I heard the other day on one reports what it says for harder for corn to go up, that's coming out of farmers' hands.
Typically, the market will rally the most whenever the farmer doesn't have it. Why? Because you don't have all this hedge pressure. I mean, the funds dwarf us in size, but when you're marketing a 15 billion bushel crop, and right now I'd say the farmer is maybe sold 2/3 or 1/3, maybe, okay? So you've got 10 billion bushels that has to come to market. What does that mean? Someone's going to offset that position, right? Because you sell it to the elevator, what do they have to do? They got to hedge it unless they sell it, or they're making something out of it, like in the case of ADM. But a lot of that has a hedge against it as soon as you sell it. That's called hedge pressure. And so if you want to see the market really take off and go, you probably need to get more of it out of the farmer's hands. What my experience has been in these situations is that the market, so to speak, inflicts the most amount of harm on the most amount of people it can. All right? Do I think that means the market's moving lower? I mean, using that rationale, you could say that. I don't, though. I do think that you're going to find support. But here's what I'm going to warn you on. I think in the short run, you've got support. If I was going to be asked, and I was asked this on Market to Market, do I think we'll see a 3 in front of corn or a 5 in front of corn first for new crop? Here's how I'm going to answer it for next fall. If you had to ask me which one's more likely for next fall, I'd say 3. I know it doesn't sound good. I'm afraid of it, though. I'm worried about it. That's why we're managing risk against it. And guess what? If it goes up and we're locked into a bunch of corn at 550, I'm fine with that. I'm fine with that. I can live there. You know, and what am I saying I'm doing? I'm buying like right now. Whenever the market report came out the other day and people were panicking, we bought a 480 put option. And then we turned around and sold a $4 put option for Dees corn. And we sold a $5.50 call. The only time I ever sell calls previous to raising a crop is if I buy crop insurance. Hear that. Don't ever sell calls unless you have something in your hands that you can sell against it. But if I'm locked into 550 Dees corn as a worst case scenario because the market skyrockets on a portion of my bushels, at least to cover my fertilizer, I think it's a beautiful strategy because I have an at the money floor. Any other questions? Yep.
Excellent, Dave. Analysis.
Thank you.
Fantastic. You have the answer to the South American problem in your data, the growth. 2019, embargo. That has killed the Chinese market. They will not come back to us. Second, what did China do in South America? What they did in Africa? Because they can't do it in Asia. There's a big gorilla over there called India. India is stopping China, but not in South America. What did they do? They built the infrastructure to ship the grain, and we can't stop it. They now have a closed loop grower customer. We're not going to get it back until we stop playing around with them. We don't call him a dictator after we meet with him. It's
Yep.
head-to-head, eye-to-eye, and come up with a deal.
Yep.
Put the cards on the table. What do you want? What do we want? But I don't think it's going to happen. It's too political.
One thing that concerns me to a great deal, of course, is that China is by far and away your largest investor in Brazil. They want to float a Panamax up the Amazon River, pick it up at the port to where you don't see all of these horror stories in fall time frame. They want to control the supply of grain out of Brazil. Don't make any mistake about it. I agree with you on that. As far as politics go, I usually don't even go there, but I don't. How would you even figure it out? I mean, but I'll take other questions if you guys want them. I do have a conference February 4th and 5th. We have the people that are speaking at my conference are Dan Bozzi, Dave Hightower, Eric Snodgrass, Joe Vaklovic, and Randy Dowdy, along with me and a couple other in-house people. We got a pretty good lineup. If you're interested, let me know because we're getting super tight on space. If you want my presentation, all you have to do is let your phone hover over the QR code, click the yellow button, but please, if you get my slides, don't share them with anyone. That's my main ask. Every winter I get people sending me my slides from somewhere in Timbuktu, and I'm like, how in the world did they get a hold of my slides? But it takes a little bit of time to put these together. I mean, I retrofitted it in the airport last night. This is different than what I did in Wren Lake by a far cry, actually. But yeah, go ahead and take a picture of that if you want it. And then any other questions before we, yes?
What's your high-low on soybeans?
High-low on soybeans was, it was like 1060, and I think it was close to 1360. It might have been 1350. I keep getting that question. I need to go back and revisit it, but those are very close. High-low on soybeans, in all honesty, I thought that the high might have ended up looking a little low. I'm not super bullish, but guys, we've been in situations with soybeans before. We don't think they're ever going to rally again, and then all of a sudden we take off on a $1.50 bender. You know, if we get that, guys, this is a sell the rally year. You want some flex. But sell the rally type situation, in my opinion. If you want to get closer to the screen, that might help too. I don't know. But again, don't take a picture of it. Any other questions? Huh? Are you seriously going to ask a question? That's my daughter in the back. What's the question, Abilene?
How many combines does your friend have?
Oh, my friend in Brazil? This is exactly what he told me, because I asked him the question. Her mind works a lot like mine. I said, how many combines do you guys run? And he said 85 or 90. He didn't know. What's 5 combines? Yeah.
What process to have a 35% return? What's the ingredients of that?
Well, I mean, a lot of it is how they're buying their inputs. You know, I mean, with their real being so low, it gives them a competitive advantage versus the dollar. They're able to sell their corn or soybeans, and then buy their fertilizer on one hand cheaper than what we can, and then sell at a more expensive price than what we are. It's just it's a inflation, it's a currency situation. And, you know, the investment in the farm ground as well. You know, like I talked to that grower. I said, what are you guys buying ground for, like in the Cerrado? He said a couple $1,000 an acre, you know, but then they've got to develop it. I said, well, what kind of beans do you get off of it the first year? He said 50 or 55 first year. He said, all we got to do is clear it. He said, it's pretty good ground. That's crazy to me. You know, they got to find a way to get it out of there, but they have a very willing partner in China. I'm telling you, these guys are spending billions of dollars in Brazil. We have to become as self-sufficient as possible. What's China's goal been over the years? Be self-sufficient. I'll tell you, the U.S. is going to have to figure out a way to be self-sufficient. We can grow significantly better corn than what they can, okay? Their bean yields are right on par with ours. Their corn yields are about, you know, 100, 120 bushel corn is pretty good corn for those guys. We grow the best corn in the world right here, all right? But we've got to find a way to be self-sufficient and to use our own products at home, because if we don't, I'm afraid we're going to be in big trouble.